Hello traders, welcome back into another video from XLpips. Today's video is going to be simple, and I have prepared this video because I want to actually show you one of the very simple and powerful entry models that you can use. Okay, so there are so many entry models that a lot of people are using, a lot of traders are actually using, but this one is also one of the I can say one of the very profitable one, because if you actually take enough time to backtest and collect enough data from the market, I assure you that you're going to actually see a different world opening up to you, and I believe you're going to actually change your trading experience. It is very simple, as you can see in this illustration. What we focus on is just simply market structure, liquidity, and point of interest. Okay, just these three things. Okay, structure, liquidity, and point of interest, SLP. Okay, so when you talk about market structure, it's simply we're just talking about the concepts of high highs, high lows, and lower highs. Okay, the direction of the market, whether we're going higher, lower, or we're just ranging. Okay, so here as you can see, the illustration is showing like the market was bullish. Okay, if you look at the market here, the market was bullish. Okay, the market was pushing to the upside. Okay, and as we're moving to the upside, we tend to form what we call higher highs and higher lows. Okay, and we find the higher highs in this area. So this is the higher high, this is the higher low, this is the higher high, this is the higher low, and this is another higher high. So these are higher highs. Okay, and this is the higher low, and this is another higher high which was formed, and this is the higher low which was then formed, and this was higher high. Okay, so at any time where we were forming a new higher high, there was this break of the previous higher high. So, and this is what we call the break of structure. Okay, so there was a break of structure which created a new higher high, and after we had the formation of a higher high, remember there is what we call price tends to create buyers and sellers in the market. So this was the push which was created by buyers. So we needed sellers to enter market and create a little bit of the balance for price to actually move in the correct way. Okay, so price created this retracement, which was sellers entered the market, and up to when we reach at this point here, created this retracement, then is that's where price again started to push higher and broke this newly formed high and created another break of structure. Okay, so this kind of movement is what creates the strength of buyers in the market, and here is where we know like, okay, the market is bullish because there is continuation of price breaking higher highs and forming new high highs. So that's the indication of formation of bullish market structure, but also formation of higher lows and price failing to take these previous higher lows. That's also another indication of a bullish market. Okay, so as you can see from this drawing here, this illustration, you can see this area down here. This is where we always have to create what we call an order block. This is why an order block is always formed. It is the point where the market initiated the movement that created a break of structure, and at some point there may be price leaving behind some sort of imbalances of their value gaps in this leg that created a new high. Okay, so this area where we have the initiation of price pushing higher, this is where there is always an order block. Okay, we always find an order block at this discount level. Okay, so immediately after price created this retracement, we always expect price to reach this order block so that we may create a mitigation, and then price can continue going higher. But what happened is price just ended here. Why? Because it may be only because of the either price may have only filled the fair value gap and decided to go higher. Okay, or it may be because just there was no enough strength for price to keep going lower. Okay, so after that, you see price created this new higher low. At this point where we have a higher low, this is where price may create another order block. Okay, so now we have two order blocks. Okay, we have two order blocks, the first one and the second one, and we always know like the best order block is the one that is at the discount level. This one is the lowest one. Okay, but also this one can also work depending on how the lower one has actually been created. But what I'm focusing now is to show you how to actually understand about the reclaimed block or the reclaimed order block. Okay, so now this area, which is the newly formed order block, is going to become an inducement level. Why? Because the lower one is not yet mitigated, so we believe that price will tend to actually sweep the higher one, and this will act as a trap for those early buyers. And after price has actually swept that this area, then it's going to become a good point for price to actually mitigate the true one or the discounted order block. Okay, so this is going to be an inducement level. Okay, IDM. And what happened again? Price again didn't respect this, the lower one, the lower order block. So this is where now this order block becomes invalid also. Okay, remember we had this inducement level, yeah, inducement level. And then we expected price to respect this because we have already taken out liquidity here, which is an inducement. But what happened is price also didn't respect this one, which was expected to be a very strong order block. Okay, so what happened is price, okay, sweep it again and create another form of sell-side liquidity down here. So this becomes a sell-side liquidity, and this order block becomes now an invalid order block. So what happens is then that price pushes to the upside again. After sweeping, it means it's like price took out some early buyers and went in the desired direction. So it means if you were taken out here, you can take your entry now at this order block when it becomes reclaimed. Okay, when price comes back again at the same level. So it means when you mark this order block and it becomes disrespected, don't just delete, just keep on extending to the right and wait for another tap into the same level where you marked your order block which failed, and that area will become now a reclaimed order block. Okay, so it is like price sweep liquidity, create market structure shift, and comes back into the same level. Okay, so if you want to actually trade it in a high probable way, it's always important if you may find there is a fair value gap at this area or maybe an order block. So it can be another order block there or a fair value gap at the same level where you have marked your reclaimed order block. Okay, so this area is a reclaimed order block. The order block which was supposed to be respected here, but then disrespected, that's going to continue becoming a support level. Okay, it's going to actually push price higher when price revisit it again. So it's a very powerful entry model. So you can see the first example on GBP USD here. You can see how this area actually becomes a very strong point for taking entries. Why? Because you can see it was this one here as our order block, got disrespected there. Okay, but then price created this market structure shift there, which is like you may mark it as a change in state of delivery. Okay, and then after that price left behind this sort of an IFG, okay, inverted fair value gap. Okay, this area here. So, and also if you look clearly there, you will see we have this order block. Okay, we have that order block. So it means same region where we have marked this reclaimed order block or reclaimed block, price revisit there and tap into this order block, and that's where you can say, okay, now this order block which has been created currently is going to become now my confirmation, and I'm going to take that entry at this area, or you may use this IFBG level as your confirmation entry level, and your stop loss has to be below this level. Okay, so that's how nice it is. You can see how price went higher, and maybe you created your drawn liquidity that right there. That was your first TP. Okay, it could have been already a nice trade. Okay, so that's the first example of how you can use the reclaimed block model. Okay, another example you can see on GBP USD on 2-hour time frame. You can see here we had this earlier. First, it acted as a support level there. Okay, so you may expect the price to come down and respect it again, but what happened is price decided to disrespect this area, and after disrespecting, you can see price reversed very fast, created a market structure shift here. and our area was this. This now was our reclaimed order block. Remember, I said if there is an overlap of either fair value gap or an order block at the same level where you have marked your reclaimed order block, then that's going to become a confirmation. So here, the 50% of this fair value gap is going to be your entry point, and you can see what happened. Is price tapped into this, and we had a very strong push to the upside, tapping into this drawn liquidity there, the buy side liquidity. A very nice trade that I believe you can see the real chart examples here, how easy it is. Okay, so another example is on GBP USD to hour. Okay, very nice case study here, you can see. And what did we have? We had this buy side liquidity right there. And look closely here, we had this formation of these levels acting like resistance points. Okay, expectation is price to respect this level and continue going down. But what happened is price disrespected them, created this buy side liquidity, and then we had the market structure shift level there because price priced very fast, created our fair value gap, left a fair value gap at this premium level. And at the same level, if you remember, if we mark now, we're going to mark this as our point of what? Point of reclaimed order block. That area which was actually like a resistance point there. That's where price is going to actually be reversed from there. You can see that like a resistance point, okay? Like because you expected price to respect this region here, okay? You expected price to respect that region and go down and add a move to the downside. You expected that kind of thing, but that's not what happened, okay? That's not what happened. So this area where we have this fair value gap overlaps with this area where we have this reclaimed order block level, okay, which now becomes a very strong point for entry. That's why you can see the action from this entry on this 50% of this fair value gap, okay. That's a very nice example, and you can see how price dropped very fast. Very nice trade. Indeed, a very nice entry model that you can use to actually change your trading experience. Okay, so you may think like maybe mark this as my claimed order blocks, or it's up to you. Okay, you may use this as a resistance level as your reclaimed price, reclaimed order block, or you may use the order block as it is supposed to be. It's all up to you. Okay, but remember that. Another example here is GBP USD 2-hour. Another example from GBP USD. Okay, so you can see how amazing and how beautiful it is. Okay, this level which was disrespected. We expected price to respect that level, but price didn't respect this level. You can see, so that's why we mark that as our what? That reclaimed order block. So very perfect area. Okay, this reclaimed order block because it was disrespected here, but then price created market structure shift there. And what happened is we had this fair value gap there, which was also, but there's some form of liquidity sweep again here. Okay, this tap into this, the sweeping of this and created a turtle soup. This was another example of a liquidity sweep. So immediately, if you have this kind of thing, what happened is that remember how you take your entries. Okay, we just remember we have this inversion or inverted fair value gap there, and that's where price just came back again, and we had that entry from there. Okay, very clean entry, but remember also the same region we have this order block. Okay, we have that order block level. Okay, so you choose your own way, like how am I going to take this entry? Am I going to use this inverted fair value gap, or am I going to use this order block? Am I going to combine them with this reclaimed order block for me to create a hyper bubble trade? So you can see how nice it is when you actually have another understanding of the reclaimed order block. Okay, let's check another example from the same pair, GBP USD to our time frame. Look at this region here, which was some form of like price created some sort of a resistance here, but then price disrespected it, created this buy side liquidity. Okay, remember this kind of sweeping is what we call buy side liquidity. And what happened is that price created an again market structure shift there. After market structure shift, look closely, you can see how this can use that as an order block, or you can use this as an order block. It's all up to how you actually simplify your trading. Sometimes we use the last T, the last bullish candle before it dropped to the downside, we use the last candle that was created. Okay, it depends, but that's how you mark your claimed order block from this area, which was supposed to be respected but disrespected. Okay, that's where you're going to mark it as your reclaimed order block. Very simple way, okay, of marking them. And you can see where this inducement, okay, inducement, you can see there. Okay, and order block, more confirmation. Okay, so there is a lot of confirmation here. I believe this trade was going to work perfectly no matter what, because it was having a very clean transaction. Okay, nice market structure right there. Another example, GBP/USD 2-hour. You can see from this region here where this order block, which was disrespected here. So we had the turtle soup, which disrespected this bearish candle, bearish order block. Okay, not bearish candle, the bearish order block was disrespected. And what happened is price went back down, created this kind of change in state of delivery, change in CISD to change in state of delivery from there. And what happened then is price revisited the same region that was disrespected. They reclaimed order block. They reclaimed this order block. Okay, this reclaimed order block was then revisited, tapped into the same level, but this time we had this order block there. That's why it becomes a very nice another confirmation for you to actually take this trade and targeting this next drawn liquidity or this always up to your time, because remember you need to back test it. You need to take enough time back testing for you to actually know how to take your entries. Okay, another example you can see from here, price disrespected this down order block there, disrespected, then created a market structure shift there. Same thing like price creating this, disrespecting it, price creating market structure shifting, price revisiting the same level, and then we take a buy. Like the same thing with this area, same thing as what I showed you. You can see here, market structure shift, then we had another order block at the same level where we had this reclaimed order block. And that's where we waited for price to tap into it, into this order block. And that's where we executed from this region here. Okay, very nice trade. Very simple and very nice trade. Very simple and very nice trade. I think you can see for your own eyes like how simple it is. Okay, targeting, okay, this or this, or up to you then how you end your risk management and your how you risk and how you take the rewards depend on your style. Okay, I'm just showing you how you can find these good setups. Another example you can see here, yeah, you can use it differently. You can use this as a point where you created this sweep or liquidity sweep, and then price created the market structure shift there, then tap into this back into this same region that can actually act as your entry. But also you can use it differently. You can combine it from this region here. Okay, you can use this as a confirmation point for you, and you can see market structure shift there, inducement right there. A very good buy from this region. Okay, you see that example. It's a very nice example. Okay, you can use this order block here as your point where price came, respected it, and if you're not pretty much sure, depending on how simple this liquidation happened here, you can wait for another confirmation, and you can see how beautiful this confirmation happened. We had an inducement here, and price came down into our order block level there, and that's why you take the execution targeting this as your highest point, or you can use this, or you can use this as your take profit levels. Okay, let's check. So that's it for today, guys. And I think I've shown you enough examples. I think if you take enough time to backtest, to collect data from the market, you will see this repeating, not just on GBP USD, not just on this same time frame. Just try to trade it on different currency pairs and different time frames. You will see the same thing happening over and over again. Okay. So if this video has been actually good to you and you have enjoyed this video, don't forget to subscribe. Hit that subscribe button. Don't forget to like, comment, and share this video for many other people to learn from this. Okay, So guys, thank you for your time and have a good day.